I'm general partner at Andreessen Horowitz. I run our fintech practice, and here's actually the very first investment that I made when I joined the firm was in this great company called Branch. And I thought I'd preface the session here by, there are 5.5 billion adults on planet Earth right now. 5 billion have a cell phone, and about 4 billion have a smartphone. And most of these people don't have bank accounts. So maybe with that as the preamble, talk a little bit about what Branch does and where you see the opportunity.
Okay, great. So a bit about my background. Before Branch, I started a charity called Kiva, which is the world's first person-to-person lending platform back in 2005. I started it in Uganda, actually. So my history goes way back to working in Africa, basically my whole adult career. About 5 years ago, we noticed a few things happening in the world. So one, smartphones were really spreading fast, and people were generally using the internet for the first time all around the world through their smartphone. Also, digital payments were spreading really fast. So people were finding ways to pay for stuff. You know about Kenya and M-Pesa, and the spread of mobile money in Africa. And so this really excited me, and I left Kiva to start Branch, which is essentially a digital bank for emerging markets. So we make loans, and we are also just about to take savings as well, and perform all the services of a bank over time.
And you're in Kenya, Tanzania, Nigeria, India, and Mexico.
Yeah, makes sense.
And in many cases, banking people where, again, they've got a smartphone, but they've never had any kind of credit history. In many cases, they've never had any kind of bank account or financial relationship. How do you figure out underwriting? Like, what is that if you just have a cell phone and a government ID?
Yeah, so there's a kind of a primordial soup happening of ingredients that make this a good idea. One of those ingredients is the lack of credit bureaus. So with smartphones, you can actually perform the function of a credit bureau and a lender at the same time. So you can bypass the need for traditional systems like Experian or TransUnion through looking at the data on people's phones. So you can see their location, which is indicative of, are they a farmer? Are they an urban tradesman, for instance? Who they're connected to. So people share with us their contact lists, and you can see in a network who's connected to whom. So circles of fraud might be very easy to detect that way. You can also see the financial transactions people are making. So people don't go home and use Gmail on their laptop in Nigeria. Their smartphone is their email inbox function. And you can actually see bank receipts. So when people go to the ATM, they'll get a receipt saying, you have 1,000 Naira in your account. And you can use that to sort of build a ledger of someone's income and lend against it.
And maybe just talk a little bit about scale. So I think you do more loans every day than Lending Club probably does in a quarter.
Yeah.
But talk about the type of loans that you make, how you often underwrite people for the first time and ladder up their credit. I think that's one of the things that's very interesting, and just how you've grown. In India, I think you've never purchased a single advertisement, and yet you're getting tens of thousands of people applying every day.
Right. Because of this primordial soup, there's a huge lack of credit, but a huge demand. And you can just launch an app in India. Any of us could do that right now. And if it had the promise of giving you a digital loan, you would basically have no marketing. People would download it. The customer acquisition cost is non-existent. So it's a very popular idea, money, obviously. So it becomes a practice of learning how to mitigate risk and how to fight fraud, which we've gotten pretty good at. Today we make about 30,000 loans every day. And these are like $50 loans. So people start with a $30 loan, pay that back, get a $50 loan, pay that back, get a $100 loan, up to $1,000.
And as you know, I always joke, it's not hard to give away money on the internet, it's hard to get paid back. How does just because there is very little infrastructure in many of these countries, how do you go from, you start off where you loan people effectively $1, and then if they pay it back, that's a good signal, of course. But how do you manage collections, or how do you manage this entire effort of encouraging repayment? Because in the United States, or in Western Europe, you have credit bureaus where, hey, if you don't pay your loans on time, your credit score suffers, it's harder to get a mortgage. There's actually, there are carrots and sticks involved, whereas in many of these countries, there isn't. So how do you think about the lack of infrastructure and what you're doing to build that out?
Right. There's a whole practice of collections and repayment reminders that you can get really good at through machine learning. So we actually use machine learning to do this, meaning to prompt people at the right time, maybe right after they get paid, to nudge them to give us a repayment. You just really have to get good with the carrots and lean away from the sticks, because there aren't many sticks when you're lending to somebody in rural, India. You'll never meet them. There's no credit bureau. So you have to be a great company. You have to have great customer service. You have to have great prices. You have to be transparent. Your customers have to love you, and you have to lean into the carrots more than the sticks. Because there's not a lot of punishment, and you don't focus on collections. We don't focus on the sticks so much. Just keeping our customers happy so that they come back and keep repaying their loans.
And where do you think this goes? So there are, again, 5.5 billion adults, 4 billion smartphones, which will soon go to 5.5 billion. Do most countries that don't have established infrastructure, do you think there will be classic banks, or will almost all of the banks of the future look more like branch? I mean, I know you're not a bank, but effectively you make loans and you're soon going to take deposits, which looks a little bit like banking, but you're doing it entirely without branches. Hence the name branch, right?
Hence the name branch. We're not a bank, but we want to be a bank. We will, with your help, be a bank. I really think there is a huge need for this, especially in places like Africa, where there's little population density is low, and people are really, really spread out. So one of the problems with microfinance is you can't really serve people that are far away very, very well, because you have to drive there, you have to meet them in a group, you have to collect money $1 at a time. It becomes too expensive, so people that aren't close in the major cities get left out. So I think there's a huge, huge demand and need for sort of a geographically agnostic bank, much more so there than here, ironically, because here we have ATMs everywhere, we have banks everywhere. We don't really need like a digital bank, maybe you disagree, in the way that most of the emerging markets really, really need it.
And you and I had dinner with the CEO of Visa last week, and Visa is an investor in your company now. And I know he's fascinated with Africa because he calls it just a giant missing, like there's no Visa coverage on that entire continent. What do you think payments looks like? Because in the United States, in Western Europe, even in Japan, in a lot of parts of the world, you've got credit cards, they're very mainstream, and it's both a payment instrument, and then it revolves into a loan if you don't pay it on time. And then you don't have that, and in many cases, in some of these more emerging markets, you've leapfrogged old technologies. So nobody has a landline, people went straight to mobile phones. And likewise, nobody has a credit card or a payment instrument, and we're leapfrogging now to mobile. What do you think payments looks like?
Yeah, it's we're already there in the future. When you go to Kenya or Uganda, you can often, at a restaurant, see a number on the wall, and you just text the number to pay. People had to do that because there weren't credit card swiping terminals. There aren't credit cards. So they skipped that whole card experience and went right to a virtual experience, albeit it's kind of janky because you have to look at a number and text it. So I think there's a big demand and need for cardless payments in Africa, probably QR code or NFC based.
Got it.
Yeah.
And then on the regulation side, I mean, one of the things that I find, not to make this into an advertisement for Branch, but in the United States, I mean, you have things like usury caps, which are well-intentioned, but for a one-year loan, like if I know that half the people in this room aren't going to pay me back, and I want to go make a loan, what's a fair rate of interest to charge annualized? It's 100%. Because under that, I'm going to lose money. There's a market failure. I have no incentive to loan. But that's too high in the US. You can't make loans at that level, at that rate that's considered usury. And then you can't actually use machine learning because you have this problem of fair lending and disparate impact.
Disparate impact, yeah.
So the nice thing about a lot of the markets that you're operating in is that they're not tied down by some of these anachronistic laws, out of like the 40s, 50s, and 60s in the US. So, I mean, how do you see that environment changing, or how do you think about regulation in many of these markets?
It's a blessing and a curse. Great question. So the blessing of having no regulation in lending in Nigeria, for instance, where we work, is that there's a lot less red tape. You can get going rather fast. You don't have to fill out a lot of forms. Great. The curse is that anyone can do it. There's no barrier to entry, and so that there's a lot of shady lenders that get into the space and then could sully the whole space and give it a bad name, which then would result in onerous regulation. So I actually like what India's done with regulation. We have been applying for a lending license for 2 years. We just got it, and it was a very thoughtful review of our interest rates, our disclosures. No hard caps, but a lot of guidance and a lot of government cooperation, actually. It's a very open and transparent process. So I think there's use for having some barrier to entry to becoming a lending company, because if you don't, the whole space will be brought down by shady lenders.
Right.
Yeah.
And as we often talk about, in many of these countries, banks make loans, but they effectively make loans to the government because they'll take deposits from consumers. Like in Nigeria, I think the risk-free rate is 14%.
That's true.
Inflation's about 11%. And if you open a bank account in Nigeria, you'll get about 5 or 6% interest. So the bank is making a healthy spread there. There's no incentive for banks to loan to consumers. Instead, they just buy government bonds. So maybe talk a little bit about how you see that opportunity emerging, because that's the other. On the banking side, you want to make loans and also take deposits, but the deposit opportunity is often, I mean, it is just massive in many of these countries.
No, I think you nailed it. So banks don't lend to people. You said this, they lend to the government. That's generally true in emerging markets. You can just buy treasury bonds at 14%. So it's great being a bank. You just amass deposits and lend to the government at no risk, and then you take the entire spread. Rich people in these markets, rich people in Kenya, rich people in Nigeria might have a nice savings account where they get 7, 8, 9, 10, even 10% on their savings. But that's like not even the 1%, that's the 1% of 1% of people in Africa. The rest of the people, if they have a bank account, banking penetration might be about 50% in Africa. So the other 50%, they're getting basically zero or negative. They really get a negative rate because there's a fee to putting money in there. So most people who have a bank account are getting no interest on their savings, and the bank's making 14%. So what we're going to do is amass, 3 million users, amass small amounts from all of them, put them in one account, and get the rich person rate. Effectively 7% in Kenya, 10% in Nigeria. Yeah, so you should do it. You should put your money in there. Yeah.
Well, what can go wrong with Nigerian naira, right?
Risk-free. Yeah.
Well, if you don't mind the currency risk. How do you think about what other countries to enter? Because the U.S. doesn't seem to make sense. People are overbanked here. And on the fintech side, we see almost too many companies that are popping out that are doing the same thing that Chase does, but with a higher cost of capital. So that's probably not going to that's not going to end well. But for many other parts of the world, there's so many other countries that you could operate in. How do you think about expanding what you're doing?
There are so many countries where this would work right now, and there's great entrepreneurs tackling this problem all over the world. But there's relatively few companies with regard to the size of the need. So if I had a twin brother or an evil twin, I would start a company like this in Brazil. Indonesia would be a great market. The Philippines. And there's just a long way to go in Mexico, Nigeria, places where we actually work. There's a need for other players, actually.
But are the local banks, are they ever competition? Or is it more the startups that you're worried about?
I'm not worried about competition. In this business, you just realize the thing you worry about is fighting off your users, like the ones that have ill intent. Banks really aren't doing this at all. Like we said, they lend to the government, they don't lend to people. And they, generally speaking, don't have good tech teams. So I wouldn't be optimistic about their ability to do this kind of work. Startups, yes. Yeah, so we see a lot of great startups all around the world. In India, there's a startup called PaySense. In Nigeria, there's one called One Finance. Great companies that are local that are doing this as well, and we work together.
And right now, most of these, just because there is such demand for credit, because nobody has a credit card. The example one time you gave me is that if you drive for Uber in Kenya, you have to buy gas in the morning, and then you'll get paid back by Uber at the end of the day.
Yeah.
And in the United States, it's like, I just put it on my credit card, and I'll pay my credit card at the end of the month.
No, there's a lot of gaps like that.
So what's the average duration of a loan that you make right now?
We give people the option of short as 1 month, as long as 12 months. I'd say the average loan is about 2 months on a dollar-weighted basis right now, and that's just our user's choice where they're at. Yeah, people would prefer a day-long loan. And to your point, if we offered a one-day loan, I'm sure it'd be very popular.
Got it.
Yeah, there's a real need for that.
All right, well, I think we're out of time, but thank you very much, and thank you everyone in the audience.
Thanks for coming.
Yeah.